Welcome to this series of videos. We're going to be taking a look at this June 2025 PM Mock exam. We'll do a series of 6 videos. This is the first one looking at the Section A questions. There'll be 3 for the Section B questions and 2 for the Section C questions. People often try to read a little bit into the mock. Just as a reminder, it's not written by the examining team. So it doesn't imply that any of the topics coming up in the mock will come up in the actual exam. And equally, it doesn't mean if they come up in the mock, they won't come up in the actual exam. They're completely independent. The main benefit of doing the mock is really benefit of practice, benefit of seeing different questions, different approaches to questions. These reviews are much more useful if you've already done it, seen where your mistakes are and learn from them, rather than just sitting and watching the video, because it's really hard to stay engaged just listening to someone talk about questions. So let's hope you have had a go. Starting with question 1 here. Which of the statements is or are true? The following statements will be made about ERPS systems. 1. Implementing an ERPS may reduce an organisation's costs, but will likely result in more manual work. Be careful with questions like this where the sentence has 2 parts. First, reducing the costs. Secondly, more work. Both have to be true for it to be true. In terms of does it reduce costs? Well, we don't know. We don't have enough information. It should reduce labour costs. It will definitely increase IT costs, but we don't know the balance. But that's okay because the second bit will likely result in more manual work. Definitely not. That's the opposite. The aim of an ERPS is to reduce manual work. And 2, a CRM system uses an ERP module to capture, analyse and distribute relevant customer information within an organisation. The ERP system sits above a CRM system, so the CRM system could feed into an ERP but not the other way around, so neither of those are true. Question 2, what's the material usage plan invariance? We've got 2 favourables, 2 adverse that we can choose from. Company produces product X, which requires chemical alpha. Standard cost card for the product shows that 2 litres of alpha required per unit at 15 per litre. When the budget for the current period was produced, the accountant didn't know the production process had to be modified to allow for a 6% reduction of the amount of alpha required. This was not reflected in the cost card. While the company budgeted to sell 20,000 units of X, it actually sold 22.5. 43,100 litres of alpha were used, which cost 706,840. The company holds very little inventory. With most variances, I teach to try and identify what information you need and then try and target that in the question. Some numbers there will just confuse and might lead to you choosing the wrong one. So we want the material usage plan invariance. When we're looking at plan invariances, I have a template that I like to use. A plan invariance occurs when there's something different that was outside the control of the manager we're looking at. And because the cost card didn't account for this 6% reduction in the amount of alpha required, that's a plan invariance. So we need the budgeted amount compared to the revised budget. That's what my B&R stand for, and that will help us work out our variance. But before I do that, if you're not confident with variances, you might want to flag this and come back later. If it's multiple choice, I'd always recommend choosing an answer and flag it, because then if you run out of time, at least you've got an answer. You've got a 1 in 4 chance of getting it right. But you should also try and improve your chances if you can. And hopefully you would understand if we've got a budgeted amount of 2 litres, but the production process has been modified, meaning 6% less is needed. If we need less than budget, that means the revised is going to be lower than budgeted. Because this is a cost of materials, that should lead to a favourable variance. So you can eliminate the 2 adverse ones. So now we've got a 50-50 chance of getting it right. So if you were to leave this and come back to it, I would recommend guessing one of the 2 favourables and then come back and do the calculation later. I'll go ahead and do it in the order it's written. There are different ways to approach planning and operational variances. I like to teach this approach where there's anything which is to do with usage or volume. I have a column here that I set up in my scratch pad, which is the amount used. And if you can put flex there, I wouldn't write that normally. This is where I flex my budget when I am doing a planning variance that's related to something that's to do with volume of use. Then I work out the difference. The amount will be measured in some units, and obviously we're talking about litres here. So then I need to find how much it costs per litre. That gives me my variance, and then is it adverse or favourable? We've already established it's favourable. So let's go and find the information we need. So I need the budgeted amount of material required, but I need to flex it for the amount of units produced. We're told there's 2 litres required, and they sold 22,500. So I've got 2 lots of 22,500. So I've got 45,000 litres. Just put litres up there just for clarity. I wouldn't type everything out myself. This is just for tuition purposes. Then we need to reduce that down by 6% because we need our revised. What I could do is do that calculation there. And then what I do is I find the difference. But I can shortcut because the difference will be the 6%. And I'm always trying to be as efficient as I can in the exam. So I've got my 45,000. So now I just need the difference, which is the 6%, which is 2,700 litres. And I'm going to multiply that by the cost per litre. I've already done my flexing of the budget here, so I always use the standard cost, which is 15. And that equals my variance. I've already got the 2,700 in my calculator. Multiplied by 15 is 40,500. I can see that's the answer over there. I've already established it's favourable, so I'm good to go. Question 3, quite a common setup, a few statements, and we have to say whether they're true or false. Indicate whether each of the following statements about A, B, C, which have been made, are true or false. These questions are often frustrating. There's normally one in there that's a bit more difficult than the others, so you might feel confident on 2 or 3 of them and questioning the 4th one, but let's see what they've given us. Under ABC, a company is more likely to make a better pricing decision in meeting its desired profitability. This one's true. That's one of the reasons for using ABC, because it costs more to do ABC. It takes more time, takes more expertise. So there has to be a benefit, and that's one of the benefits. Better pricing decision, and hopefully that feeds down into profitability. When using ABC, subjective judgment on overhead allocation may be required because an overhead can have multiple cost drivers. Overhead can definitely have multiple cost drivers. Is it also true that subjective judgment on allocation may be required? That's true. That's one of the challenges around using ABC in real life. In the exam, you don't really get examples where you have multiple cost drivers, but in a narrative like this, you can do. ABC cannot be used in service organisations. That's false. It absolutely can. ABC is good for organisations where the overheads are high, and it helps allocate those in a more appropriate way. ABC may contribute to a more accurate decision on the discontinuation of loss-making product. True, that's one of the benefits of ABC. It can help you make a decision to stop making something when it turns out that it's actually making a loss, whereas a more traditional costing approach might have hidden that loss. Number 4, what's the value of perfect information? Company plans to launch a new product and will be selected from 2 product choices, A and B. The marketing managers produce the following estimates based on 3 possible market conditions. got a poor, medium, good market condition for A and B. They both make a loss if it's poor and different varying profit levels if it's medium or good. The probability of the three market conditions are estimated to be 15, 45 and 40%. The managers correctly calculated expected values of each as these two here. Well, they've done part of the work for us, so that's useful. Question 4. I always preserve what's in my scratch pad in case I need it again later. Now you might be wondering why I did a question 4 above question 2, and I'll show you why. What happens is the scratch pad defaults to the top, so that's above. Let's say I was working down here. I close the scratch pad. When I go to the next screen, if I open it again, it jumps to the top. And the longer this list gets, the more scrolling I have to do. So it's more efficient for me to do them in reverse order. And then when I open it, it puts me in the right place each time. So the value of perfect information equals the expected value with minus the expected value without the perfect information. And we're given the two expected values. The decision is always to choose the one with the highest, which is the 232,500. Now we need the expected value of it. The expected value of is driven by what we would choose if we knew what was going to happen. So if we knew market conditions were going to be poor, then we would choose product A. If we knew it was medium, we'd choose B. And if we knew it was good, we'd choose B. But because we know the probabilities down here, we also know what percentage of times we'd make that choice. And that's how we work it out. So the poor is 0.15 times minus 800. The medium is 0.45 times 2250. And the good is 0.4 times 3800. So that would lose 120. Don't forget the minus, you'll definitely get the wrong answer if you didn't put the minus in, and I suspect one of the distractors is if you didn't do that. The next step is to add these three together, obviously working in thousands, multiply by 1,000, and then subtract it from this. However, I'm going to be efficient because I can see this ends in 500, this ends in 0.5, 500 once I multiply by 1,000. None of the others have a decimal place, so it has to be 180,000. Because by the time I've multiplied these three by 1,000, added them together, I'm going to be subtracting something with 500 at the end, which has to lead to a round number. It's a little time-saving tip. Again, we're going to need our scratch pad for this one. What's Chrome's current ratio, assuming 360 days in a year, wanted to 2 decimal places? They've got annual sales of 880 with a gross profit margin of 30%. Inventory is held for an average of 18 days. Average cash balance is 34,900. Average payables is 68,300. Customers take an average of 36 days to pay, and all sales are on credit. A lot of information to crunch through there. Wouldn't be surprised if this was one again to flag and come back to later, because there's definitely going to be a series of stages there. When it's multiple choice and I flag, I recommend picking one out and narrowing it down like we saw in that variance calculation. With this, is it worth writing a number in? I mean, maybe. The chance of getting it right is so small, it's probably not worth the effort. How do you approach these questions? You normally have to start with the end point and then work backwards, deconstruct what you've got. So the current ratio equals the current assets over the current liabilities. trying to find the current ratio. Have we got the current assets? What are the current assets? They're the trade receivables plus cash plus inventory. And all of that's divided by the current liabilities, which are anything we need to pay, any trade payables, and any overdraft. So which of these do we have, and which do we not have, and which do we need to find? Well, looking through this, there is no sign of an overdraft, so we can simplify it a bit. So we can get rid of the overdraft. I wouldn't be writing all of this out in the exam. If you can't remember what you need to do, write it now like this. Again, it sort of helps. I know I need to find these 4 variables now, and then I can find my current ratio. So what are my trade receivables? So our trade receivables is our annual sales multiplied by our receivables days, which is 36, divided by, in this case, 360. Well, 36 divided by 360 is 1 over 10. I've got 880,000 multiplied by 36 over 360. Which is going to be 88,000. So I can plug that in there. What about cash? Well, it tells us average cash is 34,900, so 34,900 just goes straight in there. Inventory. We hold it for 18 days. So I'm going to have to do an inventory calculation. So likewise, it's 18 over 360. But the inventory is based on the costs, but with a profit margin of 30% on those annual sales. We have the 880 multiplied by 0.7, which is the cost. This is another tip I have to save time. When I open the calculator, if I type numbers in on my keyboard, they don't come up. But I think it's more efficient to use my keyboard. So what I tend to do is I type the first bit of my calculation in there, and then I switch to my keyboard. Some people like to use the mouse, but I just find it a bit more clunky. I think I'm more likely to make a mistake. Definitely slower for me. So I'm multiplying that by the 880, multiplying by the 0.7. So I've got inventory of 3,800. I actually didn't need to write it there. I could have just written it straight up there. Now the obvious thing to do now is to work out the trade payables. But again, I'm always trying to think of efficient ways. I've already got this figure in my calculator. So I'm just going to add the other 2 on now. And then I've got my numerator, which I'm going to use once I've got my trade payables. I'm sure all of these little things don't make a huge difference, but incrementally over the course of an exam, I'm saving a bit of time, but I'm also pressing fewer buttons, and I'm less likely to accidentally press the wrong button. So now I need my trade payables, and that is what I'm given, 68,300. .25, and we needed it to 2 decimal places, so there we go. As I said at the beginning, quite a lot of steps to get there. We cut a bit of time out, but definitely took more than what we would normally want for a Section A question. But some of the others are quicker, and that's the way it is. It balances out over time. Onto this one. Which of the following statements regarding zero-based budgeting are correct? The ranking of decision packages is a straightforward process because activities are quantified in financial terms. Again, we've got a sentence here with two parts to it. Are activities quantified in financial terms? No. They're quantified in terms of how important they are to the organisation as well as financial, so it's already incorrect. Is ranking straightforward? Absolutely not. That's one of the challenges with ZBB. Next one, longer term goals are emphasised rather than short term because ZBB aligns the budgeting process with the organisation's missions. One of the criticisms of ZBB is it can take a short term approach. ZBB results in streamlining and centralising the budgeting process and saving departmental managers time. Again, two parts. It takes more time and it's not centralising, it's decentralising. That's false. It eliminates outdated processes and operations and reduces budgetary slack. So we've got three things we need to check. Does it eliminate outdated processes? That's what it aims to do. Outdated operations, yes. And reduces budgetary slack, yes. That is one of all three of the benefits of ZBB. Question 7. What's the controllable return on capital employed closest to? Division Camp at Barger had the following balances in their year-end financial statements: sales, op profit, non-current assets, current liabilities, including operating costs were $495,000 of head office costs recharged to Camp. 65% of depreciation of $950 was for assets controlled but not owned by head office. They wished to use controllable return on capital employed to assess the performance. So the controllable return on capital employed equals the controllable profit divided by the capital employed. What's the controllable profit? It's the operating profit, plus we need to add back the elements that should have been taken out, which is the $495 head office costs, and then the 65% of the depreciation charge. There is an underlying function that works in the scratch pad, so we can create a formula like that. So that's my 65% of the depreciation. Add the other two in, and it with 263,250. What's our capital employed? So that's our non-current assets plus our current assets minus our current liabilities. So 14,200 plus 4,120 minus 1340, that's 16,980. So the final calculation, 263,250 over the 16,980 is 15.5, which is this one here. Question 8, which of the following, or which of the statements is or are true? The following statements have been made about companies' data. 1. Structured data, whilst not laid out in columns and rows, has labels and identifiers that enable searching. Structured data is laid out in columns and rows. This is describing semi-structured data. So that's false. Examples of unstructured data include social media posts and discussions from a company's customer service chat history. That's true. 2 only. Question 9. What's the budgeted life cycle cost per unit for the new product to 2 decimal places? A manufacturing company makes many products, is launching a new product. Budgeted information relates exclusively to this product over a 3-year life cycle. I've got units, research development costs and manufacturing fixed and variable costs, but fixed per year, selling fixed and variable, and decommissioning. Life cycle costing takes into account the overall costs for the whole life of the product, and we want it in a per unit basis, so we'll need to work towards that. So there's three main types of costs. There's one-off costs, there's fixed costs, and then there's variable costs. We need to accumulate them all together and then work out what it is per unit. I've already got my variable costs per unit basis, so I'm not going to multiply them by units to then later divide by units. What are my one-off costs? Well, research and development is a one-off cost. Decommissioning is a one-off cost. So that's my total one-off costs. What are my fixed costs? Well, I've got the 375 and the 135 per year. Again, I wouldn't type all of this out in the exam. I would just do these calculations straight into the calculator. So this is giving me 1.53 million. And then I'm going to do a total of those because I want a per unit basis. Then I add in the 340,000. And we've got 170,000 units. So this gives me 11 per unit. And the variable costs are 1245 and 770. So I'm just going to add those straight in at the calculator level. 1245 gives me 3115. Two decimal places, 3115. Question 10. If X and Y being the units produced and sold for product X and Y, which of the following statements relating to the objective function and constraints is or are true? So this is a linear programming question. Area code produces two products with the following costs. Got direct materials for X and Y, direct labour, variable overheads. Selling prices are 45 and 37 respectively. Next month material will be limited to 3,750 and labour will be limited to 3,000. A linear program model has been created to find the optimal production plan with the objective of maximising profit. So the objective function has to reflect what we're trying to achieve, and it tells us it's to maximise profit. The objective function is profit contribution, which is equal to the number of units of X added to the number of units of Y, but each of those multiplied by the contribution. And hopefully that makes sense. If we take the contribution of X multiplied by the number of X's, and then add that to the contribution of Y multiplied by the number of Y's, that gives us our objective function. And that's what is written there. So what we need to do is find the contribution of X and Y. If they equal these two, then that's correct. If either or both don't equal those, then it's incorrect. Let's start with the contribution of X. Contribution of X, sales for 45, materials are 1250, labour is 18, variables are 375, 1075. Already we can see it's false. You might want to do a sense check. Obviously I could have made a mistake, so just for completion let's look at Y as well. Contribution of Y is 37 selling price with 750, 1350 and 250, and that's 1350. So both of those are not the same as we've got there, so that's incorrect. Then next we need material. It tells us material is limited to 3,750 kilograms, which means the total material used has to be less than or equal to that. And that's what the less than equals sign is here, so that's fine. And again, similar to this one up here, the total material used will be the amount of material that X uses, multiplied by the number of units of X, added together the material that Y uses, multiplied by the number of units of Y. So the next thing we need to find out is, does X use 2.5 and does Y use 1.5? Well, at 5 per kilogram, if X is being costed at 12.50, that is 2.5, so that first bit's correct. And then for Y is 7.5 divided by 5 is 1.5, so that one is true. And the labour, 3,000 hours, that's fine, it's less than or equal to 3,000. So does labour cost 18 for an X and 13.5 for a Y? Labour is 9 per hour. I can see it's got the figures here, 18 and 13.5, so I can see that's false straight away. If we were to do the calculation, 18 divided by 9 is 2, so that should be 2x, 13.5 divided by 9. I wouldn't do that in the exam, wasting time, but that should be 1.5. So we've got our answer there. Question 11. Indicate whether each of the following benefits of using big data for a large retail company are true or false. Does it help lead to improved customer engagement? That's one of the benefits of big data. We understand more about what customers want and therefore we can engage with them better. Simplifies compliance. The opposite is true. When we're processing more data, particularly if there's personal data, compliance requirements are higher. Reduces the need for skilled employees. No, we need more skilled employees or specialized employees, people who understand how to do big data processing. Reduce data storage and processing costs. Hopefully that's obviously false. Big data processing requires a lot more storage, and the costs of processing that high volume real-time data costs more. Question 12, we have to indicate if each of these are true or false. Zoteco manufactures components for smartphones. It's a highly competitive industry. Products have short life cycles and technology is constantly improving. So Zola would benefit from standard costing, as it would ensure input costs are kept in line with market conditions. That's false because it's going to be out of date. We're told that short life cycles, constantly improving, the standard costs they set up at the start of the period are going to be quickly out of date. Statement 2, just-in-time systems will be of little use to Zola because it needs high buffer stock levels to avoid stockouts in a competitive industry. A short life cycle, constantly improving, constantly changing, just-in-time would suit that kind of industry. High buffer stock levels could become obsolete quite quickly. That is also false. Benchmarking would be a useful performance management tool, as they will be taking into account other practices and industry trends into account. Yet highly competitive. If they can get that information, that data from their competitors, benchmark against those, that would be useful. Question 13 here. What percentage of reduction in labour hours is required to close the cost gap? We need one decimal place. An automotive repair company set a new repair service price at $49.95. New service is estimated to use $10.50 of direct materials, 3/4 of an hour of labour at a rate of 36. The management accountants calculated there's a cost gap based on a target cost of $35.20. So the cost gap is the actual cost minus the target cost. We need to calculate the cost gap, then work out probably firstly how many hours we need to reduce labour by, and then work out what percentage that is of the current labour which is 0.75 hours. So what's our actual cost? So it's got 1050 of materials and then 0.75 of 36. So we've got 37.5 is our actual cost. Target cost we were told is 35.20. So the gap is the 37.50 minus the 35.20, so that's 230. We need to work out what the reduction in labour hours is. The 36 an hour, currently for 3/4 of an hour. We either need to convert this into hours, or we need to convert the hourly rate into the cost of one repair. Either works. I'm going to do the second one, so the cost at the moment is 3/4 of 36, which is 27. Our gap is 230, so that's the calculation we need to do. 230 over 27 is 0.085. We need it to one decimal place, that's 8.5%. Which of the following is the best measure of resource utilisation to be included within a building block model for an audit firm? First option, average cost per full-time employee. That's not a resource utilisation measure, so it's not that one. Billable hours as a percentage of total hours worked. That one's fine, that's a good answer. So we're looking at how well they're using resources. In an audit firm, they'll be doing some revenue earning work and some non-revenue earning work. And resource utilisation to be high, we want them to do more of that revenue earning work. So the billable hours as a percentage of total hours is a good measure of resource utilisation. Just to check the others, labour turnover, that's more about staff satisfaction. Percentage change in total billable hours year on year, that's more about revenue generation. So happy with the answer there. And then finally for section A, what's the break-even point in sales for the upcoming quarter? Company makes two products X and Y, sold in a constant ratio of 1:4. X has a $9.50 selling price with a CSR of 0.5. Y has a price of 7 with a CSR of 0.7. For the upcoming quarter, budgeted sales are 20,000 units in total and fixed costs are 75,000. My approach here would be to set myself a little table up and just run through prices where I'm starting. That's 950 and that's 7. Contribution sales ratio. And then the contribution. If you're comfortable with this, you might have eliminated the first two rows and just go straight to the contribution. So 9.5 and we've got a 50% contribution sales ratio, so that's 475 is the contribution from that. 70% of 7 is 490. And then our ratio is 1:4. What I should have done up here is just outlined what we're aiming to achieve. So to find the break-even point in sales, we need the fixed costs divided by the weighted average contribution to sales ratio. We've got the fixed costs of 75,000. So what we need is the weighted average contribution to sales ratio, and that's what we're calculating here. So now I need to multiply these weightings by the contribution. Then I need to multiply them by the revenue or the sales price, and then that gives me my weighted average contribution to sales ratio. So weighted average contribution is 1 times 4.75. This is 4 times 490. and I need a total, is 24.35. Weighted average sales, 1 times 950 is 950. 4 times 7 is 28. So that's 37.50. So my contribution to sales ratio, the weighted average one, is that 24.35 divided by the 37.50. And then I have to do something which I've annoyed myself a little bit, because if I'd thought about it, I wouldn't have done it that way. What I would have done is just gone straight to the end point. So a better way to do it is the 75,000 divided by, and then we use the brackets of the contribution, which was 24.35, divided by the sales is 37.5, and then we let the calculator do it for us. That's 115,503. That's the answer there. That's the end of this video on the section A. Hope that was useful, seeing a breakdown step by step. Hopefully you picked up some shortcuts on how to use a scratch pad, doing things in reverse order. Hopefully you see the use and the benefit of that, and maybe some time-saving tips on using the calculator. Thanks for listening.